Hello everyone, good afternoon and a very warm welcome to our webinar today all about variance reporting in Sage 50 Payroll. My name's Duncan, I'm your host and presenter for this session, and I am joined by my colleagues Matthew, Ollie, Philip and Sophie, who are all standing by in the background ready to answer your questions. Let's take a look at what we'll cover in the webinar. So I'm going to start things off with an introduction explaining what variance reporting is and how it works. I'll then take you into some demos where we're going to first look at variance settings, where you can define what variance you want the variance report to detect. I'm then going to run through some scenarios where the variance reporting will come into play. So we're going to look at the different settings that you can enter and which employees appear on the report and the reasons why, and hopefully give you a good flavour of how you might use this within your own business. And we'll also touch briefly on the gross and net pay exceptions reports that you can run in addition to the main exceptions to variance report. And once we've been through that, I'll answer a couple of common questions, and then I'll run through the further support that's available to you in the form of further webinars, our Help Centre and Sage University. So all in, this should take approximately 30 minutes. Now, before we get into the introduction, I thought we'd have a bit of audience participation, and I've got a polling question just to start things off. So I'm going to just launch that onto screen now. And the question I'd like you to answer, if you wouldn't mind, is before attending this webinar, were you aware of the variance reporting feature? So I've given you three possible answers. Could be yes, and you've used the feature before. Maybe it's yes, but you haven't used it, so you've heard of it, not used it. Or maybe you had not heard of variance reporting before attending today's webinar. And I do plan to ask a similar question at the end of the session, just to see what you thought about it. So we'll leave that poll open for about a minute. Before attending the webinar today, were you aware of the variance reporting? Yes, you've used it. Yes, but never used it. Or no. And we have quite a large majority for one of those answers. And I will share those percentages with you before we get started. Last few seconds, if you want to join in that first poll. So I will close that down now. And just out of interest, sharing the results, as you can see, 73% of our audience today had not heard of variance reporting before today's webinar. 21% of you had heard of it but had never used it, and just 6% of you had heard of it and had used the report in the past. So very interesting results. So going to be something new for a lot of you here today, and hopefully you'll get a good understanding of how that works and how that might benefit your business. So just taking that poll off of screen, and we'll just start things off with a brief introduction explaining what variance reporting is and what it does. So essentially it's a report, it's a pre-update report, so you run it before you complete your payroll, that compares current payment and deduction values with previous values. Now this report will then show you any differences that exceed amounts or percentages that you have specified in your variance settings. The idea is it helps you to identify changes and potential payroll mistakes. It gives you confidence that the payments that you've entered are correct, and it alerts you to things that you may need to investigate further. So a really good sort of safety net, a bit of a health check that can run automatically at the point you do your pre-update reports, as you'll see a little bit later on in the demo. So this is what it looks like in the program. If you've set it to automatically advise when variances occur, at the point you run your pre-update reports, you'll see a prompt if variances are found, and you'll be asked if you want to run that report right now. And if you click yes, it will preview the exceptions to variance reports, and that will show you details of which employees have been identified, what items variances have been detected for, and it will give you kind of the full detail of what it's compared and what those variances are. So that's really how it works. What I'd like to show you first are the variance settings. So what I'll do for this part of the demo is we'll give you a quick demo, I'm just going to bring the slides down and we'll just go full screen for you. Now, to locate your variance settings, once you've logged into your payroll, you would start on your company tasks here in the bottom left corner, and then you'll find within the tasks there is an option for variance settings. And then the variance settings themselves are split into 3 tabs. So you've got the main settings, which will look at variances in gross pay, net pay, pension contributions, and then total payments and deductions. But you can also look for variances for specific payments and deductions. So on the payments tab, it will show you any pay elements that you've set up. And on the deductions tab, you'll have settings for any deductions that you have set up. So these are voluntary deductions. It's not things like tax and national insurance. It's the deduction pay elements that you may be using. Now, to use these settings, you first need to choose which items you want the report to check for by setting the include column to yes. So if, for example, I want to check the total gross pay and net pay, I would set these options to yes. And let's have a look at pensions as well. So we'll get it to check employer and employee pension contributions. What you would then do is you would set the variances that you would accept that you don't want to be alerted about. So this can either be expressed as a fixed amount or a percentage compared to previous values. Now, the settings that you enter here really does depend on the nature of your payroll. If everyone in your payroll always gets the same fixed salary, you'd probably want to detect very small variances. So you might even stick with fixed amounts of 0 so that the report shows you absolutely everything that has changed, even by 1 penny compared to a previous period or an average. But you can set a fixed amount or a percentage for these kind of variance settings. And for the first demo I'm going to show you, I am going to work with fixed salary employees. So I am going to look for very small variances. So I'm going to set gross pay variances to nothing because I'm not expecting that to change. Net pay, I'm going to allow £1 of variance because there can be rounding when it comes to tax calculations. And then for employer pension and employee pension, again, I'm just going to leave them as fixed amounts of 0. Now, I will come back to payments and deductions a little bit later on in the demo, but what you would do after that is you would choose what values you want to compare with the current payment values. So that can either be the last updated values, so the values from the last period you updated, or you can choose average pay. So that would take an average of the last 3 periods that have been updated when doing the comparison. So I'm actually going to stick with the last update values for this first demo. And then finally, there's a tick box at the bottom that you can select if you want the system to advise you when variances occur. And if you have this box ticked, it just means that you will see the prompt if variances are found at the point you run your pre-update reports. So that's just a flavour of the settings. I'm just going to click OK to save what I've entered so far. And before we go into some processing, I'll just give you a bit of a recap there on the various variance settings. So you find it from the company tasks in variance settings, and on the settings tab, you can choose whether to include gross net pay, pension contributions, and total pay and deductions. So choose which items you want the report to check for. You would then specify the variance type, whether you want to look for differences above a fixed amount or above a percentage of the previous values, and then you would put the variance value in. You would choose what you're going to base those variances on, either average pay or last update. And then if you want to, you can tick that box so that the report runs automatically in the background when you go into your pre-update reports. And as you'll see later on in the demo, you can do very similar things for specific payments and deductions. So now you know your way a little bit around the settings. We're going to take a look at these reports in action. So I am going to return to the demo. Let's just go full screen again for you. And I'm going to return to my payroll tasks. And for today's webinar, I've come up with 3 scenarios. So I've grouped my employees into employees that get the same fixed salary every period. So that's the first demo I'm going to show you. We've got some employees that have a fixed salary with additional variable payments. So I'm talking overtime, commission, expenses. And then I also have some casual employees who give me timesheets and their hours vary all the time. So we're going to look at different variance settings for these different groups of employee. So if I just select my first 3 employees, all of these get the same fixed salary each period. I've already set my process date and I've quickly been in and entered their payments. So I've just basically saved what they received last period, which is usually their full salary. And once I've entered the payments, the next step in my pay run would be to go in and run the pre-update reports. Now, because we tick the box to advise when variances occur, as soon as I go into this option, it does the check behind the scenes, and it is telling me that variances have been found. So do we want to run the report now? I'm going to click yes, just to bring that report up on screen. And you can see there it's opened my pre-update reports window. And considering this is a static payroll, where the fixed salary doesn't change from period to period, I'm quite alarmed to see that I've got all 3 of my employees being flagged on this report. So the report tells me it's comparing with the last update values. I've got the employee details and the item that is being flagged. And for my first employee, and I will just zoom in a bit so you can see this a bit clearer, it's telling me there's a variance in the employer's pension. So last updated, it was £86.25, but for this period, it's £862.50. So quite a big variance compared to the last update, and that equates to 900% of that last update value. So that's definitely something that needs further investigation. Employee 2 is flagging in a number of areas, so gross net pay and the pension contributions, and all of these are less than what they were in the last update. So I can see usually like £2,500, the gross pay is down on that. So definitely something we need to look into there as well. And employee 3, and this one's a little unusual, it's only flagging the net pay as changing, and that has increased this period, but it's not found any changes to the gross pay. And remember, in the variance settings, we have asked for any variance above kind of £0. So we need to see what's going on there as well. So to investigate those variances before we complete our payroll, first thing I'm going to do is I'm going to check the pension scheme for employee 1. So going into the pensions tab and into manage schemes, I can see the scheme assigned. And then when I look down at these contributions, I can see that the employer contribution for some reason has been set to 30%. Now I know that should be 3% for my particular pension scheme. It looks like someone's been reviewing the pension contributions, might have accidentally deleted it and tried to type it back in, and that's gone in as 30% instead of 3. So I'm going to set that back to 3, what it should be. And I wouldn't necessarily have seen that in the enter payment screen because it is an employer contribution, and that should hopefully resolve the problem for that first employee. Second employee was coming out with less than what they were paid last period. So I'm going to go into the enter payment screen for this one. And you might have noticed this earlier, but the hours or number value has been reduced in this case, so that the employee's salary has also been reduced. And the reason for this is that last month, they actually received some paternity pay. So they were on paternity leave in April. And at the time, I used the make up basic option to automatically adjust their salary. And this month, what I forgot to do is to put their salary back to the full amount. So that's been flagged. I've now fixed that, and I will save the payments for that next employee. Third employee was a bit of a mystery. So I wonder if anyone has any thoughts what's happened here. So I've got the full salary entered, gross pay hasn't changed, net pay has increased. And the reason for this is the national insurance. So looking in this employee's record, onto the employment tab, I've popped them onto NI category C because they have just reached state pension age, so they no longer have to pay national insurance. And looking at the history, last month they were still on NI category A, and that's why their net pay was lower, because at the time they would have paid national insurance. That was their last national insurance contribution, when they were under state pension age. So I know the reason for this one. I don't need to make any changes. And if I just go in and run my pre-update reports again, it's still finding variances. Hopefully this time there will be less of them. So yeah, I've just got employee 2. It's noted that the salary has changed, and that's fine because we made up to basic last month. That's the reason. And employee 3, the net pay changed. And yes, we know that's because of the NI category change. So it's found some mistakes. It's given us some stuff to look into, and we're now happy and confident that all of those payments are correct. And if this employee comes to us asking about why their net pay has gone up, we kind of know why. So that was an example with fixed salaries. Just going to move on and show you some employees that receive additional payments. So looking at their current payments for this month, I have an employee with a fixed salary and some overtime that they've worked, 50 hours this month. I've got the next employee who is commission-based. They've actually had quite a good month, so this commission is a bit higher than what they would usually receive. I have an employee getting round about what they usually earn by the looks of things. And I have one further employee who's had some expenses this month, and they look a little bit on the high side. So let's have a look at some variance settings for employees with some variable elements of pay, and we'll see how that might help us to detect any potential problems. So going back to company and variance settings, I'm actually going to amend the variances for the totals because I know that these employees do naturally have variances in their gross and net pay. And I'm actually going to set them all to 15%. And I want to base it this time on average pay. So on average, over the last 3 periods, if the pay for any of these items varies by more than 15% compared to the average, I want to know about it. I'm also going to drill specifically into some payments. So I want to include overtime in the report. And I know that overtime does fluctuate depending on the hours that they work. So I want to know about any changes more than 50% to the previous average. For commission, I'm going to include that one as well. And I'm going to do this one as a fixed amount. So I know roughly that the commission is about £600 per month. I want to know about any changes of more than £250 compared to the average. And then for expenses, I'm going to be a bit more strict on that one. I'm going to look for differences of more than £50 compared to the average. So I've got 3 pay elements included in the report, and I have changed the tolerances, the allowable limits for these other items. And remember, I'm now using average pay as the basis. So back onto the payroll tasks. If I go into my pre-update reports now, it's telling me that the variances have been found. So I'm going to click yes to run the report. And when the report preview comes up, I can see there are 3 employees within this selection that I might need to investigate further. So I've got 1 employee where the gross and net pay has increased by more than 15%. And that is being driven by their overtime. So did they work this number of hours overtime? Do I need to check the overtime records? That's certainly something that I might want to look into. Employee 5 also has some pay increases. That's affected the pension. So it looks like commission is pensionable pay in this example. And I can see on average, they're getting £650 commission. This month, it's almost doubled. So have they had a good month, or have I made a mistake entering their commission amount? So certainly something to check out there. And that's breached the £250 limit that I set in the settings. And then similarly for expenses, a lot of expenses being claimed this month. It's usually around £50 on average. So it's outside of a £50 variance. And that's why this item appears on the report as well. So again, things that I can look into, these could be genuine, but at least I'm aware of them, and it gives me the chance to double check them. Now, just while we're here, we did set it up to automatically advise when variances occur. So I want to show you the other way of doing it. If you don't have that box ticked, you can run the report at any time from pre-update reports. So you'll find it in the analysis folder, and you'll actually see three kind of variance reports. There's exceptions to variance report. That's the one that runs automatically, and it uses the variance settings. And we also have some additional reports, gross and net pay exceptions. So with these ones, it's quite a simple report. I'll just run one for gross pay. You put an amount in, a limit of gross pay. So I want to know about any employees with more than £3,000 gross in the month. So I put that into the criteria settings, click OK, and it's identified 2 of those 4 employees. So if I know there's a kind of maximum amount or an amount where I might want to take a closer look, this is how the kind of gross and net pay exceptions reports work. One last quick demo on my casual employees. So these are weekly paid. I'm just going to set my weekly pay date for this one. They give me timesheets, so the number of hours that they work does vary. And just looking at the current payments that I've already entered, got an employee who's being paid for 30 hours, another one 35 hours, and I have an employee who's worked no hours this week. And the reason for this is they've been poorly, they're off sick, and they're only receiving statutory sick pay. Now for this one, I am going to adjust the variance settings once again. So I'm going to look for variances of more than 50% for the totals. And let's just bring basic in, and I'll put the same setting in just so you can see that appearing on the report. They only have the basic pay element. We've got the payments entered for this period. Go into pre-update reports. It's told me the variances have been found. And if I run the report now, you can see that it is flagging employees 9 and 10. So employee 9 is being paid more than what they get on average. Employee 10 is getting paid less. So we know about employee 10, they were on statutory sick pay. And when I've checked the timesheets, it's become apparent that employee 9 has picked up some of employee 10's hours. So wasn't a problem. This is what they need to be paid, but you can see that it is significantly more than what they usually get. So a few different scenarios there just to show you. And I will just come back and recap those variance reports. So once you've set this up, you can choose to be advised of variances when they occur, in which case you'll see the alert when you go into pre-update reports telling you there are variances. If you don't run the report there and then, or if you haven't ticked that box, you can still run the reports as well as the gross and net pay exceptions from the analysis area within pre-update reports. And a quick reminder of the summary of the exceptions to variance report. It will show you the employee name and then the item that has been detected based on your variance settings. It'll then give you the previous and current values. So in this example, it's the previous average compared to this period's values. And then towards the right-hand side of the report, it shows you the variance. So the amount of the variance and the percentage. So you can see in which cases what has triggered the employee to appear on the report. So that is nearly it, and I'm sure there's been questions throughout the webinar, but I've put 3 common questions together just to sort of quickly answer for you. So the first one, you may be wondering, how is average pay calculated? So the variance settings will take the average of the last 3 updated periods when coming up with the average pay. If it's last updated, it's obviously the last period updated only. The average is taken over 3 previous periods. Second question there, could I have different variance settings for different employees? So it is actually the same settings that would apply to all of them. You might have noticed in the demo, I went in and changed some settings. So you need to kind of come up with what fits your particular needs the best. Remember, you don't need to run this for everyone. If you don't tick the box to advise when variances occur, you could always add that variance report to your favorites. Just make sure you run it as part of your pre-update reports. And then third question, do I have any tips on what variance settings to use? 2 tips for you actually on this one. What you could do to start with is you could just run You could set your variance settings to detect all variances, so fixed amount 0, run the report, and that will show you what variances are being found. And that will give you an idea of the sorts of percentages that you'd be dealing with. And you could then maybe make a decision on what limits you want to apply to the report, so what you actually want to see. Or if you want to do it a bit more in depth, you could run historical reports. You can run the report to Excel, and you could do some simple analysis. You could maybe look at averages. You could look at last periods. You could put formulas in to work out what the historical variances have been. So a few different ways. That's kind of how I prepared the demo today. I looked at some historical reports and put some formulas into Excel. So I hope that's helped out, and it has actually brought us to the end of the webinar. But before I go through the further support, I do have another polling question for you, which I'm going to launch on screen now. So this question is, after attending this webinar, how likely are you to start using variance reporting? So I've given you 4 answers in this one, so a bit of a scale. Are you very likely to use variance reporting? Are you somewhat likely? Are you somewhat unlikely? Or are you very unlikely? And if you wanted to give us any context or feedback on the reasons for your answer, feel free to drop it into the Q&A or even on the survey feedback when you exit the webinar. But I'd be very interested to hear whether after attending the webinar you'd be likely to use the feature. So we've got very, somewhat, for likely or unlikely. And you know what, I will share these percentages at the end as well. We've had about 80% of the vote in now. So if I close that down, here are your results. So great to see 46% of our audience are very likely to use this feature. 40% of you somewhat likely, so you'll have a go, see what it does. 11% somewhat unlikely, I'm sure there's good reasons for that. 4% very unlikely. Again, it's not going to suit everyone, but great to see that that's something new that might benefit some of you guys out there. So thanks for joining in the poll there. Just to finish off, I'm going to mention some of the further support that's available. We'll keep the webinar open a few minutes after the end, just to give you the chance to look through questions as well. But we do have some upcoming webinars coming up in May and June, and we've got Sick Pay Made Simple next week, and we have a series of pensions themed webinars in June. So they're all available to book now. We've got various dates for the pensions ones as well. You find all the details at sage.co.uk/webinars or by following the links in the handout. Our online help centre is always available to you 24/7 from the help icons in your programme or from sage.co.uk/help. So you can use that to search for keywords. You can read our support guides, and if you need to get in touch with the support team, you'll find all the contact details from there as well. And we have a range of e-learning, certification and bite-sized learning at Sage University. So if you haven't already signed up to that, it's at sageu.com, completely free to access. So do check that out as well. So we are at the end of the half hour for this short session today, but as promised, we're going to stick around a few more minutes to give you the chance to look through the Q&A. Remember to copy and paste any questions and answers you might want to take with you. We'll do our best to provide as many answers as possible, but it's been quite a busy session. So if we do miss your question, apologies in advance for that. If you want a copy of the handout, make sure you download that before you leave from the piece of paper icon. And we will be sending you a follow-up email later on this afternoon, which will contain a recording of this webinar and also another link to the feedback survey if you didn't get a chance to fill it in when you left the session. So I am going to go on to mute shortly, just to check out the questions, see how we're getting on with those. And I will come back to wrap things up when we're going to close things down. So I will speak to you shortly. Okay, so I haven't seen any new questions come through the last minute or two, so I think we are going to call it a day there. Short and sweet today from us, but it was a brand new session. Do let us know what you thought in the feedback survey, and check out what else we've got on offer upcoming throughout the rest of this month and into June. But on behalf of myself and the guys behind the scenes, thanks so much for joining us today at the webinar. Hope you enjoyed it, and we look forward to seeing you on the next one. So it's goodbye for now.